Roberts with the Live Well Group at Remax Escarpment, and I'm here to introduce to you today Nicole Reynolds. She is a local mortgage agent and she's going to talk to you about mortgages.
Hi Tina.
Hi.
How are you?
Good. How are you?
Good. Thanks for having me.
Oh, I'm so excited to have you on the show.
Mm-hmm.
I think you're the perfect person to basically talk to everybody and tell them what they need to know.
Absolutely.
Is it okay if I ask you a couple of questions?
Absolutely. I'd love to answer some questions today.
Okay, excellent. All right, so the first question that I have for you today, Nicole, is why work with a mortgage broker versus the bank?
Well, the reason that I would tell somebody to work with a mortgage agent versus a banking institution, is that mortgage agents are licensed and regulated and insured agents. We are constantly being regulated. We are under a lot of compliance and we have to maintain our license. It's very, very important that we have ongoing training and ongoing webinars and ongoing information happening with legislation. So that's the number one thing that would differentiate us. The other thing that I would tell you is that with mortgage agents, we have access to the same products as the bank. So if somebody is stuck on the bank and they want that security for the bank as a lender, we have access to those same products, but with the customer service of a mortgage agent. I'm not privy to any particular lender. I'm accessible to lots of different lenders and lots of different products. So I have your best interest in mind. You're my client and I'll basically be doing things that are in your best interest.
That's awesome.
Mm-hmm.
Excellent.
The other point that I want to mention about mortgage agents is that I have a fiduciary duty to you to give you the best advice. So maybe some of my counterparts at lending institutions are more in a sales role. I'm more in an advisory role. So the best thing for you is what is my primary importance level. So sales versus advisory, and I'm giving you that educational component versus just trying to sell you on something. That's more what differentiates me as a mortgage agent versus somebody that's in a lending institution that just cares about their products. I have a lot of access to different products, and lots of people will qualify for a mortgage under the different lending scenarios that I have access to. There's different B lenders, there's different private lenders, and basically almost anybody can qualify for a mortgage under the different products that I have available. So even if people think that they're not mortgage material, I think they will be pleasantly surprised if they contact me, the different types of products that I can offer.
That's awesome.
Mm-hmm.
So Nicole, what types of income or jobs qualify for a mortgage?
Well, like I mentioned before, there's lots of different scenarios where people, lenders will accept a lot of different incomes, such as business for self, declared income, there's child tax benefit, alimony, tips, commissions, part-time support, disability. There's almost any level of income that will qualify you for a mortgage, and lenders are more acceptable to lots of different income levels than they ever have before. So if you're not in the box of the A lender, there's lots of different opportunities for you to qualify under B lenders or alternate A lenders, or even just mortgage lenders directly that only offer mortgages. So there's lots of opportunity for people to take advantage of the low rates and get themselves into the market right now.
That's perfect. So Nicole, when it comes to rates, what's the best way to go? Variable or fixed?
Well, there's a lot of discussion about fixed versus variable right now, and a lot of people have questions about that. And fixed rates are very stable, but they are increasing. The 5 top banks have increased their fixed 5-year term rate over the last 2 months. And so you really do pay a premium for that consistency in your payment. So fixed rates are on the rise, and typically the variable rate is a lot lower. So if you can withstand the bumps and lumps of variable over the course of your mortgage, you're going to definitely come out ahead. And what people need to realize about variable rates is that they don't just automatically take out one Friday an increase in your payment and you won't know. They do notify you, and it is for a 3-month period of time. So variable rates are very, very, very competitive and very, very low right now. So I'm a big fan of variable, and right now they are so much lower that the Bank of Canada would have to increase their rate like probably 4 or 5 times in order for you to catch that fixed rate. So I'm definitely a big fan of variable. And what people maybe don't know about the variable rate is that some lenders will offer sort of the cap rate. So you can pick variable, but you can pick a threshold of where you're comfortable and keep it at that level. And then it's always consistent, that payment. So you're getting the benefit of the benefit of a variable, but with a fixed capped rate that you are comfortable with. So I'm a big fan of variable, and I really, really encourage people to have an open mind when they're looking at rates. The rates are significantly better with variable.
To be honest, I bought my first house in 1996, and my mortgage throughout all the years to present have always been a variable mortgage.
Right. And did you feel like that was like stressful at times, or?
Never.
No, exactly.
Because I always calculated what I would have been paying on a fixed, and I was still always saving money.
That's right. And the one other thing that I want to mention with fixed versus variable is that with fixed rate, if you want to break your mortgage for any particular reason, you're looking at a penalty of up to 5% of the outstanding balance. And that can be thousands of dollars. And a variable rate, it's always only ever a 3-month differential. So it's really, really a significant cost difference if you want to break your mortgage. And most people are breaking their mortgage for lots of different reasons within 2 to 3 years of a 5-year term. So you really do need to weigh your options when you're looking at different rates and the different products available and the different terms to find out what's best for you. But yeah, that's another reason.
That's wonderful. Okay. So I have one last question. Oh, actually 2, if that's all right.
Sure.
Okay. So first one is, how much should you save for closing costs? This is a really important one as a realtor because my clients ask this all the time.
Yeah. And, it's important to understand that closing costs are not something that can be put into your mortgage. These are actual fees that are upfront that you need to have the lump sum cash payment for. Some people would say 1%, but I'm going to say it's really closer to 2.5%. You're looking at land transfer tax for a new purchase, and that can be, at least $10,000. You're looking at legal fees, and legal fees for a new purchase versus a refinance are significantly higher. And you're looking at possible appraisal costs, moving costs, lots of other hidden costs that you're not really familiar with. So when you're looking for your down payment, you need to look at least 2% above that fee for those costs that are closing that are above that and can't be amalgamated into your mortgage.
Okay, that's excellent. All right,
Okay.
down to the last question.
Okay,
this one is near and dear to my heart because I think it's so important that people know this right now. And so my question to you is, what should parents be doing right now to help their kids, their children, to get into the market later? Because we know that prices are soaring and there's a lot of children out there that are now adults and can't get into the market. So what can parents be doing right now to help their children?
That's an awesome question, and the number one thing that I would offer as advice is take advantage of the low rates that there are out there right now to refinance and take that equity out and buy a home. Whether that is another second home, an investment property, a cottage, a rental income property that you can pass along to your children. Get into the market now while the rates are low, and take advantage of the low mortgage rates that are available to you. So the scenario is that you take the equity out of your home and then you buy a second property, because money is inexpensive, and then you have that investment property for income, but also for your children and for their legacy. Because by the time they get a chance to buy, we don't know where income, their income will be lower, but we don't know where the rates will be. We don't know where the housing prices will be. There's a lot of unknown factors. So what parents can do right now is take the equity out of their homes and buy real estate. Real estate will never go down. It is the most solid investment that you can make. And so that is the number one thing that I would tell parents right now, is for their children to take out the equity out of the home. Don't just have it be debt equity. That's what I call it, debt equity, that you're sitting on. Take that money out and buy a second property. And then you've got options later on down the road.
I would say the second thing you could do is call Tina Roberts, and she could hook you up with that
100%.
investment property.
Absolutely.
Yeah. I know myself, for my kids, me and my husband have purchased 3 investment properties, and that's what we're doing. It's not so much for, we have our retirement, but we also have made sure that our kids are going to be able to get into the housing market. It's really important. You take a look at that, because it's going to be really tough down the road.
Yeah, I agree with that. And the other thing about that is, it's not about giving your children something. It's about having options that you control later on down the road. So you're not susceptible to rates and housing crises and things like that. You're kind of controlling the process, and you're getting income at the same time. It's a great investment. It's a great idea. Capitalize on that income and call Tina.
Absolutely. Well, Nicole, thank you so much.
Thank you for having me. It's been great.
It's been really great. And I think that this really helps people that are thinking about getting mortgages. What's the best way to go about it? Mm-hmm. I'd say give Nicole a call. She can sit down with you, and she can let you know all about the process.
100%. I work for you, and no call is unimportant. I would love to have a conversation with you, and we can talk about what you qualify for, what you want to do, your future goals. I'm open to any conversation.
Awesome.